Now, when going on YouTube or TikTok, I constantly see people claiming to make hundreds of thousands of dollars every single day from trading stocks in the stock market. And guys, today is the day where we break down some myths and give you guys a very, very realistic time frame when it comes to swing trading and trading stocks in the stock market. And for those of you that don't know who I am, my name is Carter. I'm a full-time swing trader in the stock market, meaning I don't day trade and I don't hold positions longer than 1 year. We're going to be talking about pretty much my approach and my recommendations when it comes to trading stocks. And if you guys want to learn more about swing trading, check out my school down below. Code half off for 50% off. But guys, let's jump into this. So when going on all of these sites, whether it's YouTube, TikTok, Instagram, you see traders or people claiming to make thousands of dollars every single day. And guys, I want to be completely upfront. If you're expecting a get rich quick how to trade stocks today and make $1 million, leave this video. This video is going to be a very, very realistic time frame to understand and trade the stocks. So let's jump into this. Now, when it comes to trading stocks in the stock market, there's pretty much two different ways you guys can trade stocks. The first way is called day trading. Now, obviously, day trading, super easy to understand. You buy a position and sell a position during the same trading day. Now, a swing trader is the other way you guys can make money just from trading, because you can make money a million different ways from the stock market. But swing trading is what I focus on. This is holding a position for more than a day, but less than 1 year. On average, I hold my positions for 6 to 9 days. There will be times where I buy it today, sell it tomorrow, but it all depends on the stock and pretty much my approach and strategy behind it. Now, when getting started with trading, a lot of people focus on the broker, and a broker is super, super important. Now, the broker I would recommend, completely honest with you guys, is going to be Moomoo. Now, Moomoo is a 100% designed broker for traders. They have great charting, great indicators, but overall, one of the more important things that they offer is something called paper trading. Paper trading is using simulated money to practice your entries, your exits, your risk management skills. And the reason why this is so important, and one of the reasons I would highly recommend this broker, is because the more you practice, the more confident you're going to get, the more understanding, and the more you're going to know your strategy and the type of trader you are, because a strategy that works well for me might not work well for you. So the biggest recommendation is to paper trade, to figure it out and learn as much as you can. And I'll put a link to Moomoo down below. They're absolutely fantastic. You guys can get 15 free stocks by signing up. Now, when it comes with actually understanding a strategy, stay tuned for the end, because we are going to be showing you guys a recent trade that I took and my approach behind it and how I made a little over $3,000. So check that out. But guys, now let's jump into the very, very realistic approach when it comes to swing trading, and pretty much giving guys a 3-year time frame to become a full-time trader. So when it comes to swing trading stocks, a lot of people have this assumption that it's an easy way to get rich quick. And guys, this is going to be a 3-year approach when it comes to trading. And honestly, it can take you longer than this, and it can overall take you shorter than this. But I think that this is a very, very good approach when it comes with trying to become a full-time trader. So let's jump into this here. So breaking down year one should be 100% focused on learning about the stock market, trading strategies, technical analysis, but overall risk management. There are so many resources you guys can use, whether it's YouTube, TikTok, or even my amazing school. And the thing is I'm not even recommending my school. I just think having a school or a course can really, really cut down on that learning curve, because the more you learn, the more you're going to earn. And books are obviously available down below as well. But guys, during this time, what you guys should be really focusing on is paper trading. Like we talked about, practice your newly acquired knowledge by paper trading. That's pretty much using simulated money and not real money to understand how the market works, to test different strategies. On top of that, choose your market. Determine which markets you want to trade in, such as stocks. That's what I do. But some people trade forex. Some people trade ETFs, index funds, futures. My recommendation, focus on one that you understand and one that you kind of enjoy doing. Because for me, I enjoy stocks. I've always enjoyed stocks, and it's just something that I kind of like. Now, during this time of this 1 year period, the more important thing is to develop a strategy. Developing a strategy is going to be a key thing. Experiment with different swing trading strategies and pretty much find the one that suits your personality, your risk tolerance, and overall your schedule, because we all have different schedules. So for me, I'm a swing trader, meaning I buy a position, I hold it for several days. I don't want to be a day trader. It's way too risky. It's way too heavy on my emotions. And I just think it's better for me to swing trade than day trade. It's what I feel more confident in. I used to day trade, lost a ton of money. Then I focused on swing trading, and it's something that I've enjoyed ever since. Now, year two is going to be super important, probably one of the more important years. And the reason why I say that is because about 85% of traders quit at year 2. Now, and the great thing about you guys, if you guys follow this plan, is this is going to be when you guys actually slowly start introducing money and capital. So during this time, though, what you guys should be doing is refining your strategy based on your experience from paper trading. Refine and choose your strategy to make it more effective and suited for your goals. And backtesting your strategy using historical data. There's a ton of great websites out there that you guys can do and see how it does over previous market conditions. This will help you gain confidence in your approach. But overall, start small. A lot of people think you need hundreds of thousands of dollars to get started with trading stocks in the stock market. Guys, you guys can start small. Just have very, very realistic goals with yourself is pretty much the number one thing you guys need to do. If you guys have $100 in your account, I wouldn't recommend trying to make $100 in your account. Focus on making $1, $2, and just slowly get that confidence and continue to work on your strategy and your emotion sides. Year 2 is going to be an emotional year because you're going to see your hard-earned cash, whether it's $500, $100, or $1 million, whatever you guys choose to fund your account with. This is when you're going to see profit, but overall loss. So having very, very good emotions is going to be very, very important. But overall, track your performance. Keep a trading journal like this one. I'll put it down below. This is absolutely fantastic. But overall, the reason why it's important is because you get to record your trades, your emotions, and your lessons learned. What I'm getting at here is trying to learn and understand everything with your trades is going to be what makes or break it with you. Looking at your losses as opportunities for learning lessons is going to be super important as well. So guys, focus on just tracking your performance and learning, and just slowly start introducing cash and capital into your account here. Year 3, this is going to be your transition into live trading. So now we've gone through 2 years of 1 year simulated. 2 year is a very, very small account. During this time, you guys should have confidence. You should be a little more consistent with your trading and gradually increase your size of your trades and capital allocation. So increasing the amount of money you're trading with, but overall still implement those risk management strategies. No matter how much you have in your account, whether it's $100, $500, or $1 million, still implement those risk management skills. On top of that, understanding your stop loss, sticking to your risk reward ratio is always super important. But guys, probably the most important thing you guys can do is to continuous learn. This is going to be very, very important. Just like how the stock market changes, your approach should change and alter as the years go on. So continuous to learn, focus on that learning, and you'll be in a fantastic situation. And obviously be able to adapt to market conditions, seek out others' feedback. That's why joining a trading community is super important, because you guys can ask questions. Now let's jump in and look at a recent swing trade that I took this past week. I hope you guys enjoy it. All right, so this past week, what we did is we actually shorted a stock. Now, normally I am a long investor, meaning I buy and sell at a higher price. That's kind of my go-to. But the reason why I shorted this stock here with Carvana here is because, in my opinion, it was super, super overvalued. It was overvalued at a variety of different indicators, and that's why I decided to short this position here. Now, one of the indicators we use is something called the RSI line. This is a momentum indicator. Pretty much anything over an 80 is considered overvalued. There will be times where it does rally up, even though it's overvalued. Now, on the undervalued side, normally anything under a 30 is considered undervalued. Now, right now, or in the past, the stock was trading for near and around a 92 on the RSI. So what I did is I went back and I looked at previous data. Now, one thing about previous data in stocks is history tends to repeat itself. So looking back at the last time it was trading for a 92 was all the way back in here where the stock went from $61 all the way to $41 a share, which, guys, that sell-off is near and around a 34%. So what I did is I understood that. On top of that, what we saw here was this massive gap up on this earnings. Now, basic emotions when it comes to trading stocks in the stock market is any action in the stock market is often an overreaction. So yes, this stock gapped up. Everybody was happy. But as we zoom out, what do we notice here? As we zoom out, what do we notice? Well, this stock chart has been getting crushed recently. And with this recent amount of buying pressure, it was like buying the stock all the way back in 2022 and in 2020. So about 2 to 4 years ago, you guys could have been buying this same stock at its current price. Meaning for all of these people in here or in here, whenever they bought it, they are now looking at a lot better of a profit. So what happens is when you're up on your money is you sell your stock. And that's kind of what we saw. We saw a huge volume spike on the bottom here, you guys can see, which is a very, very important indication for future sell-off. And you guys can see the thing just stair-step its way down. And this might not look like a huge move, but look, this move was at near and around 7%, which yes, it's not 100%, but guys, swing trading and trading stocks in the stock market isn't about making those 100, 200% returns. It's about those base hits of 1, 2, 3, 4, and with the occasional 7% hitter. And that's how you swing trade. That's a very, very basic strategy, looking at an overvalued stock by looking at a beautiful indicator called the RSI. If you guys want to learn more about swing trading stocks, check out my school. It's absolutely fantastic. I'll see you in there. Like, subscribe, and I hope you guys have a fantastic rest of your day.